A massive real estate brokerage just shut down. $8 million in buyers and sellers deposits have vanished, and consumers are freaking out. But here's what nobody's telling you. This could happen to anyone buying or selling real estate, and you may not even know your money's at risk. Hi, my name is Zen, and I own and operate a RE/MAX brokerage in the Greater Toronto area, meaning I sign off and check on all the trust accounts for our clients and money coming in for our clients to make sure that none of it vanishes. So in this episode, from my perspective, I'm going to be breaking down what happens to your deposit once you hand it over, who actually holds the money, how trust accounts work behind the scenes, and most importantly, how to protect yourself so you don't end up in the same nightmare as some of the people who are caught off guard in this whole iPRO collapse. So currently, the alleged problem is that the real estate brokerage has had a shortfall of $8 million, meaning $8 million is missing from the trust accounts. And I can tell you as a broker of record or the person who signs these checks, if that money is missing, you generally have 1 week to provide it back and put it back into the account. Otherwise, RECO will take actions. And it sounds like RECO took some actions because you can see over here that they have basically forced, or it seems like it's forced, iPRO to shut down. Now, I'm not going to comment on all the rumors and everything that's happening with this brokerage, but more so provide context for if you watching this are a buyer or seller and have transacted with iPRO, how to protect yourself. Basically see if you're affected and how to basically get some money back if you're affected and what kind of recourse you can have to mitigate the amount of damages that you will sustain. So I'm going to go through this announcement by RECO and some points that are important I highlighted, go through how you can get insurance, what to expect, whether you're affected or not, and also just the flow of money in the real estate transaction so that you as a consumer understand what's going on. And I also understand that there's a lot of real estate agents wondering if they're going to get paid for deals that they've done before. If you watch this video, you also understand where your money is going to be coming from as well. Because I want to take all the information and knowledge I have from managing my brokerage and distill it onto this announcement so there's more context. Because the first thing that I have a slight problem is if I do a search on this announcement, the word contacted comes up 21 times. It seems like a lot of the action item RECO has recommended is to contact your agent, your legal representative, or the iPRO brokerage itself. And I just unfortunately don't think you're going to have any answers because sometimes agents don't know what's going on, nor do they know how the flow of money works. I've tried calling the RECO claim just to get an idea, and it's been busy for the last little bit. Every time I call in, it's like trying to call the CRA in April. And if you call iPRO, they're probably just say, I don't know what's going on. So it leaves the consumer hanging out there to dry. So I don't like that. So this is why I'm making this video. So the key thing that we have to understand is what's going to happen with pending transactions, because that's the most important. So they're saying right now, these will continue to close in normal fashion, but you have to just understand the flow of money and the nuances on whether these things can close, where the missing money is going to be, and if that money is going to affect the actual closing. Now, if you are buying and selling with an agent that worked at iPRO, that agreement or representation is terminated. So if you have a listing, it's gone. You have to go back and get it again. And if you want to work with that agent again, they have to be licensed at a brokerage because the agent is a contractor with the listing brokerage. And technically as a seller, you are hiring the listing brokerage. Now, this is the exact same thing on the buying side. If you are looking to buy something and your buying agent is at Realtor, they will need to be licensed at a different brokerage and you have to sign a new representation agreement. So this part I've highlighted in blue says, I have a transaction that has not closed yet, meaning it's firm, it's binding, the buyers and sellers have agreed to a price, the waivers and conditions have all been set, and they're just waiting for the closing date. But right now, the brokerage is closed. So I'm going to go through how the flow of money actually happens in real estate transactions and whether your deposit will be safe or not. But the one thing I do want to mention before all of this is there's actually quite a lot of people that are affected. So when I quickly search for just iPRO brokerage, the listing side over here, which is people who are selling with them, right now there is still 223 properties that have not closed, meaning they are still technically holding on to 223 deposits. Now, on the buying side, the cooperating brokerage, there's about 294. And this number may not affect the consumers as much, but iPRO will technically be the one collecting the commissions for these agents. And this is where agents who are caught in this collateral damage as well will also be concerned about whether they're being paid for the transaction, the work they would have done as well. And a good way to know whether your deposit, whether from a buyer or the seller side, is actually held at iPRO, the brokerage that's being shut down, is look at your agreement of purchase and sale. So if it's for freehold homes, it's Form 100, or there's different variations of it depending on the type of property. But the one thing you want to really look for is this one right here, where it says deposits. So if the deposit was paid to iPRO Realty brokerage, it means that the money is sitting in iPRO brokerage. So if you are in a transaction right now and you're not sure if you're affected by this because you don't know who the buying and selling brokerages are, check your purchase agreement. You want to make sure that you don't have what I have on the screen. If you don't have what I have on the screen, you're okay. Do not worry. So in majority of the real estate transactions where you have the agreement of purchase and sale, you have what we call the selling side, the person who's selling the property. So the selling side would entail having a listing brokerage, the brokerage that lists the property for sale on the MLS, and it has a designated agent called the listing agent. So you as the consumer will be interacting with the listing agent, who is a contractor for the listing brokerage, and you'll have the seller's lawyer during the finalization of the transaction. And you have the exact same thing on the buy side. So if you're on the buying side, you have what we call the cooperating brokerage or co-op brokerage. And you as the buyer will be dealing with the co-op agent or the buyer's agent, and you would have the buyer's lawyer. Even though this sounds rudimentary, I think a lot of people don't understand the basic fundamentals of buying and selling and who represents who. So this flow chart here is the flow of money. And what I have highlighted here in yellow are funds that could potentially be caught up in the iPRO situation. So let me illustrate to you now that you understand the buy side and the sell side. If you are the buyer and you are providing a deposit for a property, so in this case, it would be the deposit based on the purchase agreement and sale, which would be this part right here in the purchase of agreement and sale. Your money as a buyer will be held up in the listing brokerage, which in this case, iPRO. Now, I've contacted and spoken to a lot of my real estate lawyers, and the agreement is this. If you are the buyer and you have fulfilled your obligations of the purchase agreement, you have done your duty of care to actually pay the seller what they are owed for their property as per the agreement of purchase and sale. The challenge right now from understanding the agreement and contract law is the seller going to be getting their money that is held at iPRO, or in this example, the listing brokerage? Because what happens with this deposit, and a lot of consumers don't actually know, is that the first person that gets paid off the deposit is actually the real estate agents. So the listing brokerage gets paid by this deposit, and so too does the buying and the co-op agent as well. And if there's anything outstanding, the balance of deposit is actually given to the seller. Now, where is the seller going to get the rest of their money? So what happens is the buyer traditionally will get a mortgage. So this is your lender, call it one of the big banks. And the lender will actually fund the property, but it's going to go into the lawyer's trust account. And the buyer, in this case, would give the balance of the purchase agreement after the deposit to the buyer's lawyer's trust account. And if you ever bought or sold a property before, this is your statement of adjustments. And don't worry, I will have an actual example with numbers so you can follow along in an example. And what happens on closing day is that the buyer's lawyers will fund the balance of the deposit and the mortgage funds over to the seller's lawyer. And the seller's lawyer will pay the balance to that over there. And that's generally how the seller receives most of their funds, generally through the lawyer's trust account. So for most sellers, you should be okay. What we're going to be analyzing is whether you're going to be getting the balance of the deposit based on the size of that deposit. So in this example, let's say we are buying a $1 million property. Traditionally, the buyers will put in 5% deposit. So in this case, it would be $50,000. And if we were to go with your traditional market price of selling a property at 5%, your listing fee would be, so you would take your $1 million times 0.5%, which is $50,000, times 1.13, which is taxes, HST on it. So the outstanding amount that the listing brokerage has to pay to the listing agent and the buyer's agent will be $56,500. So in this example, because the $56,000 is greater than the 5% or the $50,000, What actually happens is that the seller's lawyer has to pay the listing brokerage, which works out to be the $50,000, which is from the deposit to pay the real estate agents. And then you have to minus the professional fees, the real estate commissions, which is 2.5% plus tax. So there's a shortfall of $6,500. So the lawyers will actually be paying the listing brokerages $6,500. And in this example, the listing brokerage, or iPRO in this case, actually owes no money to the seller. So you as a seller in this situation are okay. So what will happen on closing day is the buyer provides the balance of the 20%, which is 15% because 5% is over here, to the buyer's lawyer's trust account. The bank will also fund $800,000 or the 80% to the buyer's lawyer's trust account. And you'll also get a lot of the adjustments, like such as your land transfer tax or your statement of adjustments that adjusts taxes and maintenance and etc. But for the illustration of this example, that doesn't exist. So then what happens is you take your $150,000 from the buyer, the $800,000 from the bank, which adds up to $950,000, and you give it to the seller's lawyer so that they can pay the seller. And in the example where you had the 5% listing fee for total for the buyer and the seller, you have to deduct that $6,500, and this is why the seller will now then get $943,000 for their property. So that's exactly how this would go. And in this case, the only collateral damage right now would be the listing fees that are held at the listing brokerage. So this would be your listing agent isn't getting paid. This would be your buyer agent isn't getting paid. And this is one of the things that are in this article that I don't think they say too much because it's also not in the RECO announcement on which type of trust accounts are actually compromised, which I'll explain a little bit more later. Now, where the consumer side could get into trouble is if the listing fee is less than the deposit. So in this case, if the deposit is 5% and the listing fee is less than that with HST. So everything exactly the same, but if the listing fee was 2.5%, you would take $1 million times 0.25%, which includes the buy side and the sell side, plus taxes, which is 1.13%. And this is how you get to the total listing fee and professional real estate fees of $28,250. Now, this number is greater than the $50,000 provided. So this is the dollar amount of money that the seller who has listed their property with the listing brokerage or iPRO, and this is money that's going to be missing for the consumer. Now, obviously, in this example, the listing agent, which would be the sell side commission, and also the buying agent, which would be the buy side commission 2%, is also missing and outstanding. So this would be the most common instance where the consumer, being the seller or the buyer, is not going to have their money paid back to them. So how do you get your money? The first thing is to complete a consumer deposit claim form, which is on this RECO site, and I'll put it at the description of this video so that you can actually understand it. But when we look at the actual insurance and how it works, this is where I think we're going to have some problem. A successful claim against a consumer deposit insurance will result in the insurer paying for your lost deposit to close a real estate transaction on your behalf. In most instances, I do think these transactions will close, but the coverage responds in such that a brokerage, theft, fraud, or insolvency or misappropriation of funds, it could be one of these right now, subject to the terms and condition of policy below. And here's a fun fact. In the almost 20 years since the implementation of this professional liability insurance program administered by RECO, over $8 million in consumer deposit claims have been made. Now, if we go back to the article over here, there's about an $8 million shortfall. So how much is the insurer going to pay? So if we scroll down here, you can see that what's the limit and how many. So you can see that there's a limit of $200,000 per claim. Now, hypothetically, if we were to do a 5% deposit on that, what you would do is take the $200,000, divide that by 5%. That means you're looking at $4 million property if you use your traditional 5% deposit. I don't think there are that many properties in that instance. But the problem here is that in one single event, so the closing of iPRO, there's a maximum amount of $4 million on a prorated basis for everybody. Do you remember what I was saying about how there was $8 million shortfall? Where's the other $4 million coming from? And this is why I actually think it's rather funny, where this is such a large case that if RECO has only paid $8 million, over the course of 20 years, we can increase that by 50% very, very soon, plus some missing dollars amount. Now, this professional liability insurance is across the board, and it's paid for by your agents and are required to actually trade real estate. So, you as a consumer, buyer, seller are actually insured, not to be concerned. But going back to your maximum $4 million, the problem right now is right here. The consumer receives a share of total towards their deposits. The share of limit is determined by a prorated basis. So there's $4 million that can be covered by the RECO insurance, but there's $8 million outstanding. That means everybody gets a 50% haircut because there's only $4 million to pay back the $8 million. And there's a chance this could just be the tip of the iceberg. So as a seller, be prepared to make a claim for half of the balance that's owed to you in this example over here, which is the money that is owed to you. And for real estate agents, just be prepared to lose half your income depending on how long this settlement actually takes. Now, one of the things that most consumers don't understand, or actually even agents, and I understand this because I run my brokerage, is that real estate money is actually held in two trust accounts. You have your trust accounts that are for the consumer, which is money going to the sellers in this case. And I'll explain that in a little bit. And you also have your commission trust account, which actually goes to pay realtors. So when real estate deposits come in, especially those that are coming from buyers, when you as a seller hire the listing agent, so call it Bob Realtor, they are actually employed by listing brokerage. So in this case, iPRO. You as a seller are entrusting the fiduciary duty for this listing brokerage to hold your trust properly. So you have to go after the listing brokerage for the balance that's owed to you. And where this money is held is in what we call the trust account. So any money that gets paid to the sellers or any consumer has to flow through the trust account. The thing that I'm not really sure of right now to shed some light on this entire situation is, does RECO mean trust account money that's missing in the trust account, or does it mean trust account money that's missing the commission trust account? Because what happens is when real estate deposits come in, a lot of the times if you're the listing agent, the trust account goes to the commission trust to pay the realtors, or a lot of listing brokerage will actually send money into the commission trust account to pay the realtors. And this is where I actually think most of the collateral damage could be made over here in the commission trust account. Because if we look over here in this example of $1 million, most of this money, if the deposit was smaller than the amount that were paid out to real estate agents for the transaction, it's the real estate agents that are going to be losing the money because there wasn't any money to go back to the sellers to begin with. And the buyers will be getting their property because they contractually already paid the amount of money that were owed to them. So I think a lot of the collateral damage from all of this is going to be coming from the real estate agent side. And it's an unfortunate thing because, and as much as people want to poo-poo on real estate agents in Toronto and they don't do much work for how much they're getting paid, there are a lot of transactions where these agents have put up money to sell these homes, or they've represented the buyers that they actually may not get paid for a very long time, depending on when the settlement goes. So this is actually a very scary thing for the entire industry. So without clarification from RECO on which trust account is in jeopardy, and there's going to be probably more investigations, we don't know how many people are actually affected and the percentage of who's going to be affected. Because if it's strictly the trust account, then that's going to be a lot of consumers affected. If it's the combination of the two trust accounts and the commission trust accounts, my suspicion is going to be a lot of realtors who are affected, because that percentage of deposit that's paid generally goes to pay out the realtors first. So their income is going to be missing for a little bit. Hopefully this sheds some light on the flow of money in real estate. And unfortunately, this can happen a lot of times, whether you put your money in a listing brokerage or you put it in the lawyer's trust account. The person who is responsible for the trust account has what we call the fiduciary duties, or basically the duty of care to manage that account properly. And if there's whatever reason, whether it be a broker of record, like the real estate agent who manages the trust account on the selling side brokerage, or a lawyer who manages the trust account on their bank account side, you just have to trust that person is going to do the right thing and not run off with your trust money, because it's happened on both sides in the past before. It's just very unfortunate this time. It's such a large amount. So many people are affected because it's a larger company. And if you're wondering how you can protect yourself from this in the future, even if you work with a listing real estate agent and they're very, very good, you don't know who the broker of record is, meaning who manages a trust account. So even if they're really, really good agents at iPRO and you hire them to hold this deposit and trust, it's not their problem. It's the person who manages a trust account's problem that has ran off of the money. It's not that listing agent's problem. And this is one of the reasons why I opened my own brokerage, because I'm kind of a control freak and I want to control where the flow of money is, because I understand all of this before I opened my brokerage and I saw where some of these issues lie. And it's just very unfortunate, whether it's the consumers, buyers and sellers, or the realtors who are caught in this, because a lot of people, I suspect, are caught off guard. Even from talking to the agents who are part of this, a lot of people are caught off guard. So there's a lot of collateral damage that's causing this. And if you are unfortunately caught in this collateral damage, whether you're a buyer or seller or realtors that are caught in this, make sure you file that RECO claim right away. And now that you understand the flow of money, calculate how much money is owed to you. And if for whatever reason, some of these missing funds prevent you from closing, this is an example where if you're a seller, you're also buying and you need all the funds to come out, make sure you run the numbers properly so you're not caught off guard when you're closing the property you just bought. Hopefully this helps, and I'll see you in the next video. Until next time, your move, your future. See ya.